All right, folks. So the real ones tap in over here at this channel because we cover all of the assets from cryptocurrency, business, real estate, precious metals. We cover our strategies for executing in each asset class. Today's update is going to be on real estate. This is the greatest transfer of wealth in world history. I am your host, Zach Rector. And as always, I'm just trying to bring you some facts, some truth here in the midst of all the chaos, in the midst of all the lies. How do we actually understand what's taking place in the current events? And then what action should we be taking in the financial world? Hey, if you haven't figured it out yet, you're going to get a participation trophy, but that doesn't mean you're going to win when it comes to finances, when it comes to what's taking place in the economic world here, when it comes to what's taking place in your country as we see society break down on every single level. Now, today we're going to focus in on real estate. So before I rant any further, let's stick to the topic. And I appreciate all of you guys. We haven't done one of these in a while. Usually I'm just throwing in a few pieces about real estate into our overall live shows. But I decided I have a full rundown of what's taking place in the real estate market tonight. I really appreciate you guys coming to you on Sunday, August 7th, 2022. Big update. I'm going to probably actually try to come on for a second time tonight too, so look out for that. We might run up a late night session on cryptocurrency and an overall update, but nonetheless, we come to you every Monday through Thursday at, that's going to be at 6:30 a.m. 6:30 a.m. Monday through Thursday, and then at 6 p.m. on the Rumble sessions on Friday. And then usually I try to make it on the weekends too. But hey, I appreciate all the support. Let's get right on into it. Thank you so much, guys. Okay, so to get this party started, let's talk about just in. U.S. Senate passes the $740 billion Inflation Reduction Act. So good job over there in Congress and the Senate, taking action every day to continue selling out the American people. And we got to start out with this, folks, because this is going to make the overall situation that much worse. And that's why we call it the greatest transfer of wealth in world history, is because they're just going to have to keep on printing money. Okay, they're just going to keep on injecting stimulus of different type into this system. Now, real estate is a market, an asset class that heavily relies on interest rates and on that money supply. And so everyone got a participation trophy. Everyone was having fun. Not only in all these real estate, all these asset classes, but specifically real estate. Everyone had been winning. On paper, our equity had been going up. Anyone who wanted to call themselves a real estate investor and, get an Airbnb, get a rental, do a flip, do a deal, was winning. It was really good times. And now, with the interest rate hikes taking place and them struggling to continue inflating with the money supply, we're seeing that real estate demand has cooled off. Now, let's take a look at the numbers here, just to give us a picture, an idea of where we're at historically. 1970 median home price is at $17,000. 1970 median income's at $9,800. Okay, so 1 year's income would have paid for half your house. Now let's fast forward to 2022. Median home price is $440,000. Your median income is at $61,000. Okay, big difference, and we're gonna get into why the wages aren't keeping up. The inflation crisis is squeezing everyone. And what we're seeing now is as these interest rates have rose, that's popping it for everyone, from the average homeowner to the first-time home buyer and for the real estate investors themselves. Now, we're going to go through this. We're going to go through a couple case studies, basically, essentially stories from the streets. Some of these aren't verified. I'm going to share you some Redfin data, some common Fred data, accepted data that all the real estate folks are talking about. But we're also going to share some Twitter posts here from just people that are on the streets, on the ground. I think it's important to watch. Real estate Twitter, hashtag real estate Twitter, I think they call it RE Twitter, is where I like to stay tapped in and see what these guys and gals are doing in the real estate market and what they're seeing on the street. So this is in Oshawa, Canada. We've seen the detached home, just your average single family detached home. The average sale price in February was at $1,200,000, down here to July at $800,000 for that average sale price in Oshawa. That is in Ontario, Canada. We're going to bounce around a little bit. This is a story from Brampton, another friend's story. Sold 3-bedroom stacked townhouse for $999,000 in Brampton. Original price was $500,000. Bought a detached in Brampton for $1.7 million at a variable rate. So what we've been seeing, a lot of people are tied in on 5-year variable rate interest rates. They're not locked in for 30 years. So these rates are adjusting every 5 years, and this is coming in as a rude awakening for these people. In February, he bought a $1.7 million home, detached home, in February. Now, detached in his street is selling for $1.1 million, so he's already lost hundreds of thousands of equity. Was paying just $1,600 for his home before. Remember, he had a 3-bedroom stacked townhouse. He sold it for $1 million, had $500,000 in equity, so he had cashed out nearly $500,000. Moves into the next deal, and now he's paying $4,600 a month, and he's lost $600,000 in equity. I wonder if he has his job still. See, this is where the recession's really starting to hit us. All these lagging indicators are the layoffs that are taking place, the job numbers, which we're going to talk about the phony job numbers at the end of this session, but it all relates back to real estate and what's taking place. Real stories from, the streets here. And these people thought they were, cashing out, moving to the next deal. And then this economy just flips on us. And then the central banks flip policy on us. It's a double whammy financial tsunami that is set up to wipe out the middle class. The little bit of wealth that these people had. They had 500,000 equity. They cashed it out. They weren't just holding it on paper. They actually cashed it out, got the cash, but then they rolled it into the next deal at a 5-year variable rate. Now they're at $4,600 in mortgage payment compared to $1,600. And then they probably are about to lose their job too. Or their business is struggling. They're barely hanging on. And how much of their disposable income is going to their bills? This is why I like watching the real situation that's taking place here. This shows you what's taking place. Meanwhile, in Canada, Toronto home prices down most in the past 4 months since 2005. So we're seeing so much of the data go back to that previous great financial recession. The great financial crash of 07, 08. Basically, it ramped up in 05, 06 with the real estate frenzy. But then we started to see the bubble pop there in 07, 08. Okay, and then we were in a situation for years. Don't forget that. The last recession really was the start of the American Depression. And I call it that because we have depressed growth. Yes, technically they're redefining recession. So now we don't even know what recession is. But we've been depressed in the growth that we should have had, that we could have had. If we had a real free market capitalist society taking place here, real free market enterprise entrepreneurs building businesses and real estate investors investing in a market that's not based off of participation, but based off of actually providing value, which at the end of this, I'm going to talk about what I recommend, what I'm doing right now in this market in terms of real estate, how I'm positioning myself, how I'm looking to invest in the real estate asset class. These markets are getting hammered. Metro Phoenix area MLS, single family, non-distressed sales. Median sale price in May was $515,000. In June, we dropped down to $503,000. That's a drop of 2.3%. Then we go down to $490,000 in July. That's a drop of 2.6% from June, and a 4.9% from May. So nearly a 5% drop there in 2 months' time. Down $25,000 in 2 months. So it's happening here in the United States. It's happening in these metropolitan areas. These high-flying markets are really feeling the squeeze, are really flipping. These high-flying markets. Real estate got super hot. Obviously, the Californians were fleeing the Communist Republic of California. Can't blame them. But what was taking place here is we had these iBuyers, these open doors, these Wall Street guys were needing to park cash. They had so much freaking money. Remember, this is the greatest transfer of wealth in world history. These people have so much freaking money. They're posting record amounts of losses. That's what they're posting, right? But remember, they're sitting on a bunch of cash. They're sitting on a bunch of assets. Open Door is dumping 1,700 homes in Phoenix, right? So this is what we got taking place in Phoenix. We have this market dropping 5% in just 2 months. And then we have Open Door dumping 1,700 homes. What do you think the rest of the big guys are doing as well? Right, these guys are offloading these properties. San Diego real estate in July, sales off 43% year over year, inventory up 22% year over year. Way more inventory. We've seen it in LA as well. Many of these markets. People are trying to exit and get what they can if they can afford to move. And now we also have to talk about, there's also the migration that's taking place in real estate. Real estate is so dynamic. And this is why I'm cherry picking some markets that are getting absolutely hammered. And maybe you're tuning in from the Midwest and you've just been steadily at a linear pace, increasing at 3% a year. You're chilling. But these high-flying markets and then these communist republic cities like San Diego and California cities, these people are leaving. They're getting out of Dodge, right? And so we're seeing inventory up 22% year over year as well. Okay? Continuing on, the fever has broke. This is Redfin data. More price drops than any time since at least 2015. Now, Redfin only goes back that far because that's when they got started with their tracking with their models. This is Redfin models, Redfin's data. So if we look here at this, though, at the Fred, this is, I don't know, some metric, some index here. It's tough to use these indexes on real estate. Just one point on the statistics and data of real estate. It's tough to use these because these indexes, they pull from the major metropolitan areas. But I mean, your market's local, your situation's local in real estate specifically. But anyways, out of this Fred, whatever this is, the average US new home price, second largest monthly decline in 50 years, fastest decline from all-time high in history. So this is falling as fast as ever. As fast as ever. Truly incredible. Now, I thought that I would throw this in as a joke. Let's take a look at what's happening in the metaverse. The metaverse